All right, hello, welcome traders. It is Thursday, December 19th, 2024, day after the Fed meeting. Fed came out as expected, cut 25 basis points, and as I think everyone expected, said they would most likely pause into next year, maybe two rate cuts next year. And I think personally, I think that was the consensus that everybody had. Apparently, it was a surprise to some. So that inflation may not be as under control as they thought, and that they might pause. I think everybody and their brother was expecting that announcement, but either way, the market sold off yesterday. Decent sell-off yesterday, and a pretty big vol spike. In fact, the second largest, I believe, the second largest vol spike maybe ever yesterday. So huge vol spike yesterday. We hung in there pretty well. We've got our vol hedges in place. We've got, I think, our sizing proper and our trade plan in good shape. So we hung in there pretty well. Had a good day, relatively speaking. Yesterday, we had a decent day today in the markets. Markets were pretty much just flat on the session overall. They tried to rise, they tried to sell, they tried to rise again, then they sold off, and then they pretty much ended up in no man's land today. So I'm going to take a look and show you what I'm seeing in the markets and where potentially we go from here. But I just wanted to discuss a couple of these things with you just to give you some idea of at least where I'm at, where are we trading. Now, if you look at I won't share it with you, but if you look at the fear and greed index, it's now down into extreme fear. Extreme fear. Does that make any sense? Everybody is extremely afraid of the markets, which means if you think, well, maybe it makes sense, but everybody thinks the market is just going to go to hell in a handbasket tomorrow, based upon what? The Fed saying the economy's good, we see growth ahead, inflation may stick around for a while because the economy is doing so well, and we'll probably pause on rates. Are any of those things really bad for the markets? I don't really think so. They've already cut, 100 basis points this year already. So already started to cut next year. The economy looks super. The gross GDP today actually looked pretty good. So fear and greed, we hit the extreme fear of the market. But when the market is fearful, you should be greedy. When the market's greedy, you should be fearful. So we've gone from kind of the greed to extreme fear. Is it time to start buying in? Well, I don't know about that because we're only off maybe 4 or 5% from the all-time highs, and I don't think that's enough to really signal some kind of an all clear in there. And the NASDAQ is even in better shape than the S&P overall. We did see that the 30-year mortgages climbed today a fraction, and because of that, you know, we're seeing, as the rates climb, bonds are falling. Bonds are the biggest problem in my portfolio right now. It's not ES, it's not the market selling off, it's bonds. I don't own a ton, and I don't have any naked puts. Well, I do, but they're part of Strangles. So I do have only two Strangles on in a trading portfolio, but I do have naked puts on TLT in the investment portfolio. I'm okay if we took assignment or I need to roll. There are plenty of time left in there, so I'm not too worried, but bonds definitely not performing well. Uh, we did get jobless claims today. It came in a little lighter than expected, which means less people are unemployed. And is that good or not? Well, the economy is strong, as we've said, so we continue to uh, look at a strong economy. So where do we go from here? I think if you take a look, and I'm going to share my screen with you, I want to share the chart um, of the S&P over the last 5 years or so. Um, I think, you know, I think for next year we stick around in this range. Let me share exactly what's going on here. So let's share the screen and take a look. So here's where we are right now. Now this is a look back to 2020 to today. Now, we've moved in this regression channel that I just had pulled up on here. Bottom of the channel, then took 2 years to get to the top of the channel. And in 1 year, in 20 and 22, to the bottom of the channel, then took 2 years again to get to the high. So the old adage of we take the escalator up and the elevator down. Yeah, it takes 2 years to get to the top of the channel. It takes a year to undo, not all of it, but a year to get to the bottom of the channel, then 2 years to the top of the channel. Now, do we see something next year that takes us lower? Now, if you extend that out and you look at that, that would put us somewhere around 5,000 at next year if this would happen. Now, do I see the markets dropping 1,000 points in the next year? Okay, off of six right now, so a 16% drop next year. Yeah, it's possible. I mean, anything can potentially happen. I think if it took a year to pull back 16%, we will do awesome with the 112 trade. The 112 trade perfectly set up for this. I'd be pretty excited if that's where we were. However, don't know that that's exactly what's going to happen in here. We're guessing, but we are in an area now that I've been warning about for weeks where the markets could be at new highs. We're still bullish and we could sell off. But let's think about things for next year. The Fed says economy seems pretty strong. Unemployment not going bananas. Okay, there's still opportunities out there. You got GDP growing. So again, economy is strong. You've got oil production potentially not only staying strong, but ramping up if Trump drills, baby drills. Okay. Well, if production goes up and the demand is not really there, which right now it's not, and we'll take a look at oil. In fact, let's look at oil and take a look at this. So oil's been drifting downwards now since October of last year. All these just down, 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 and it's in this kind of this trading range now. Is there more downside to come in oil? Maybe. Is there a lot of upside in oil? I'm not seeing it. So if oil prices stay low or even drop a bit from here, is that good for the economy and is that good for inflation? Well, I say heck yes. So if oil's dropping in price, okay, and it's cheaper, okay, the consumer's going to get out and travel more. They're going to be able to make more products cheaper. Air travel, everything's going to be cheaper. I think that helps keep inflation in check. So I think oil really going to help the markets overall continue to move along, and I think they'll keep inflation down. So I really think there's some good positive things in there. Now again, we had a huge VIX spike yesterday. Calm down. We all know that volatility is always, 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 always going to mean revert. So I expect that it will continue to play out that way. It may take a couple days or so, but every time the VIX spikes, the market tends to run up after that as well. Doesn't mean it won't, okay? But I think we continue to just trade your plan. If yesterday made you nervous, okay, so if you struggled yesterday because your buying power exploded, if you're trading futures or trading stocks, whatever, your buying power went too crazy, or it got to levels that you didn't like, if you saw significant loss in your portfolio, maybe you're trading too big, and you've got to make sure you've got the right hedges on. I don't know that you need to hedge volatility in a PM, stock and ETF type of account. Okay, you should probably be doing it in futures, depending on how many futures you have. But you should still have some hedges on, and you should have some risk management in place, or at least have your plan for risk management. One of the things I've been doing more recently is at these levels that I've been warning that, hey, we're going higher. For now, things are bullish, but I'm very cautious. When I get cautious, when the caution meter ticks off for me, I start selling on my investing portfolios. I start selling more in the money or at the money calls. I'm not out of the money by 20 to 30 delta anymore. Now I'm in the money by 10 delta or something along those lines, depending on where I see support. The in the money still gives me premium to collect. The extrinsic value I'm going to keep. If we pull back, I'm going to keep the whole thing. If we go higher, then I'm going to lose money on the intrinsic. I'm still keeping the extrinsic value, so I still keep the premium, but my underlying leaps or shares are going to increase. So I think when you get to those levels that we're at, now we start to ratchet down those covered calls lower and lower and lower to either at the money or maybe even in the money, 10 delta. I don't know about 15, but 10 delta or so. And you just start selling at the money or slightly in the money covered calls against your longer positions. Okay. That helps protect overall and generate some income while we're at these lofty levels. If the market does start to pull down, okay, we're going to be in great shape because we'll be offsetting much of those losses with our in the money covered calls. If the market goes up, the long calls or the long shares continue to increase, and we still keep the premium that we sold it for. So either way, I think we can win. So I think you just got to keep an eye on it. I would continue to make sure you're taking advantage of downturns here, but not being overextended. So let's jump a little bit more into what we're looking at here for the markets. And I talked about oil. It's just continuing to move sideways in this uh, value area. It's pretty much at a steady pace sideways. Stochastic momentum dropping on the daily, rising on the weekly. I love the yin and yang piece. I think you can strangle oil in here. Our strangle on oil is pretty flat for the last 9 days. But overall, I like where it is. IV is a little low. IVR is at 20, but not the worst thing in the world. When it comes to ES, yeah, we had a pretty nice pullback yesterday. Okay. And so this week, definitely down. We did break this rising wedge, which is my concern that once you break that rising wedge, okay, now how much farther down do we go? We start looking for support areas. Well, we did land pretty close yesterday to the 50-day moving exponential moving average, and we sat on it all day today. Now, we did bounce a bit today and then sold off to the close. I mean, a fractionally higher day today, and we're almost at 6 o'clock my time Eastern. So we'll get a refresh of some of these things as the market opens back up soon. So let's keep cranking through this. But we held the bottom of the Bollinger Band. We held this support area right about 59.20. So slammed on it, held it again today. Bollinger Band still not opening up. Nothing looks terrible in here. And I don't think the Fed said anything scary to people. If the economy is going to be good, earnings have been good. You think inflation might hang out in the same area? I don't think inflation is getting worse necessarily. And if oil keeps dropping, that's going to certainly help inflation. I still have a pretty good picture of this economy. I would love to see the pullback, and I don't know that we got enough of it yesterday and today, but nothing bad. Okay, this is great movement, I think, in the markets. You should be excited about, moving into next year, not at the all-time highs, even though it was only an all-time high 4 days ago, we were at all-time highs. So we're not far off of them. I think we could drop another 5 to 10% potentially. If we dropped it at 5,800 level, it wouldn't be the worst thing to see 58, 5,900, which is a little bit of a drop from here on ES, but we're almost at 59.41. So we don't have a long way to go, another 100 and some points to get into that area. But we still remain above the 21-day moving average on the weekly. And we're well above the 50 down at 5,500 or 54.77. So we're still in a good uptrend. We've had nice, drops before and then new highs. I think if we come back to, this 21 or even the 50 here, I think we can see new highs from there potentially, because I think those will be great opportunities to get back in. There is still money on the sidelines. Let's look at bonds, which is the biggest pain in the tuchus for our account. We had a pretty good, down day yesterday, another down day today overall. It's been a down 2 weeks as we've dropped from the 120 range all the way down here to the 114 level. So we're down at 114. Now there's some support right here around 114 and change. Yeah, we pierced it fractionally today. If we continue to drop, I'm not surprised, but we could see maybe a little bit of uh, holding out in this area here. If we look at the weekly chart, doggone it. Let's see if we can get back to that chart here since it went haywire on us. I wanted to pull in just a fraction. Okay. Bollinger Bands are opening up a bit. Volatility is increasing when it comes to bonds, but no, this is a support level, and then we've got another one here about 112.5 from these previous pivot points. Before we get, after that, then it's down to the 107, and it's probably thinner structure at that point. But I'm not saying get long bonds at all, but I'm not super worried about where bonds are going necessarily. Down could be the thing, but it would not surprise me to see a little bit of bounce from here or some sideways consolidation in bonds. I think you just hang out. So I'm not trading ES. No new trades right there. Oil, I still think you can strangle it. I think it's still an opportunity. Bonds, I I'm less, I don't want to do anything on it right now. I'm not going to sell naked puts and try to game the market in here until I see some sort of an uptick in this. But RSI oversold, stochastic momentum oversold on both the daily and the weekly. RSI on the weekly is getting close to oversold. MACD has been falling. Squeeze has fired to the downside. All of these things are not bad for us to maybe find some sort of a bottom in here or trade sideways. I like strangles in here if we get a little bit of a bounce. I don't know that it's a bad thing here to strangle, and I would keep it above the previous lows of this or below the previous 107 lows. That 106, 105 area strangle, it's not a bad thing to look at. And bonds right now, I mean, you can see now that we hit 6 o'clock and we're up just fractionally in bonds, pretty much just flat now that futures are open. But it's good for our strangle, number one, because our strangle is just dead flat at even basically. But you've got an IVR in bonds now of about 47. Okay, that's not a bad spot to be looking for some potential trade. So I'm not there yet, but we could be looking at it. All right, gold just opened as well on the futures market. We've been in this kind of value area here, trading sideways. We didn't really break it hard. Today was a little bit of an up day in gold, so a little bit of a bounce in gold, and now we're getting a little bit more of a bounce in the new session here. Getting oversold, but it's still bearish here overall. But we held the 21-day moving average on the weekly. We're trying to hold on to this this trend line here, which is not a really it's not a great trend line. Probably technically should be somewhere along this line, to be honest with you, to get more touches in. So we have broken it, but there's some support in here. There's going to be some more support down in here if we wanted to draw supports out. So just giving you some sense of, where do we have some support in here? I think down in these areas, we are sitting on a put credit spread. It's down, it's not out. We'll see what happens. I'm not going to try to pick the bottom in gold, but I don't think gold's terrible here. I don't think copper is terrible here either. The uptrend line that we had, see if we can pull this thing forward a bit. Okay. So this trend line bounced on it once, twice, now three times. A little bit of a break today, but not the worst thing. I still think we're in this bit of a value area. Now we're at the bottom of it. We are oversold daily and weekly on the stochastic momentum. So the momentum's run out. Do we see this thing start to bottom out? So I think we're running out of momentum on the downside here. Bottom of this area. Could this be a potential support level in here? Let's see if we can get this thing extended. Okay, there's some support off of this previous low that we've bounced off of before. So copper, again, not the worst thing in the world. Silver doesn't look as good. So silver, we did break and also when we're looking at gold, we're holding the 21-day moving average on the weekly. Copper, Okay, we've broken that. We're holding the 200 day on the weekly, which is not great. Silver, okay, we've broken the 21 on the weekly, and we're trying to hold the 50 now down here. Not my favorite chart. I still think this looks somewhat weak. I did close silver positions today, one for a $20 gain. So that was our gain today was 20 bucks. So we made 20 bucks on the session today, and that's it. We just took a silver strangle for a small gain off of it. NASDAQ, I think, looks pretty good. Okay, this thing had overreached, shot up higher, new all-time highs way up in here, then came back down, still inside of this rising wedge pattern, the more recent rising wedge pattern, hasn't broken below, is holding the 21-day moving average on the daily, is holding well, is still above the 21 on the weekly. So NASDAQ and the Magnificent Seven, I think look pretty good. And then lastly here, small caps, the Russell doesn't look all that great. So really no trade or anything to put on here for now. So just trying to give you some sense of, what I'm seeing out there. Not a lot of new moves, but not a lot of, certainly shouldn't really be a lot of panicky stuff going on. I wouldn't be surprised on any gap down. I give things 3 days. So this is just day one. We've got 2 more days to go. Okay, Friday, maybe Monday. We'll see. Do things kind of settle down a bit? All right, let's take a look now that we've looked at futures, and let's start to take a look at some of the stocks and what's going on. In fact, let's cover stocks that we trade specifically. We do have a very recent trade on AMD that we did in the active trader service. We put on a bull trap trade. We sold the 115s. We're at 118 here. This thing is pretty overdone to the downside, but it doesn't mean it can't go lower on AMD. We'll see. I wouldn't be surprised to see AMD starting to put in some sort of a bottom here around the 200-day moving average on the weekly. Wouldn't be surprising. We're at the bottom of the Bollinger Bands, the 3 ATR levels here. It would not be surprised to see AMD hang in there. If it doesn't, we'll get out of the trade. All right, we do have Google on for a naked put. We are up on this trade. We're up 8% on this trade. So far, this trade's been good. It's moved up a little bit of a pullback. Google looks great. It's nowhere near any of its moving average, and it was well over its Bollinger Bands and its 3 ATR level. So this pullback on Google, super healthy, I think, and it gives us another higher high and now a chance for a higher low in here as Google continues to just move up on this. It's got multiple different trend lines to the upside. It's broken that downtrend line there. So we could be looking at some support in here as well for Google. I think this looks decent. Here, resistance, resistance, okay, then gapped up above it, okay, right there. So I would say 182, not a bad spot for Google to come potentially back down and retest if it does that, but it still looks good. So I think Google looks good. All right, NVIDIA, we are in NVIDIA with a couple trades. In the active trader service, we're in a Jade Lizard that looks great. We sold the 120s to pay for the 136, 137 calls. Okay, so we're way down here at the trend line near the 200-day, below the Bollinger Band, below the 3 ATR on NVIDIA. We also have a naked put in NVIDIA at the 110 level. I like both of these in here. And if we would get assigned at 110, I would absolutely take the assignment. On that at 110, I would be ecstatic to own NVIDIA. I think at 110, putting us back to, where we were back in May of this year. So, hey, rewind the clock 7 months, and can you get, if you could go back and buy into NVIDIA 7 months ago, would you do that? I think the answer is yes. There and get a decent discount. People that bought in the 140s, 150s, you're hurting a bit. But if I get in at 110, absolutely love that. That would put me right at the 50-day moving average. It's going to put me above the 200, right around the 200-day moving average. I like all of those on NVIDIA. So good on NVIDIA there as well. Let's switch gears to one of my favorites, and let's get into Bitcoin and MicroStrategy. So here's MicroStrategy. Obviously, parabolic weekly chart. This thing needs to drop, and it has been. I mean, it dropped that same week. We got back up into this 440-ish, 450 level, and now we're back to the 320 level on this thing. Nice pullback today to the 50-day moving average, bottom of the Bollinger Band, which was fairly tight. Okay. I I don't mind this in here, so I think this looks pretty interesting overall. Can you really identify any sort of a spot to be in? Well, you've got this gap. Let's say here. So we got a gap below. It's probably better to maybe pull charts out tomorrow from TradingView so we can get some anchored VWAPs in here and some volume. But I still think this 280, 270 level, maybe we fill this level, maybe we don't. You're long in the squeeze. So you're squeezing to the downside, firing that thing here. You're getting oversold on the chart, on the stochastic momentum. Definitely have come down from your highs, and yet we're still getting good plays. Now we have three plays running in MicroStrategy right now. I have a poor man's covered call. Well, the long calls are down a bit, but the covered calls, I've almost already paid, the freight on what the longs are down here, and we just booked another, I think, $2,600 today. So I booked about $2,600 today on calls, on one contract of calls on MicroStrategy, and I opened another one. And since I opened that other one this afternoon, we're already up $423 on that one today. So we keep making money. Now we also have uh, some jade lizards that are reverse jade lizards, essentially, where I sold the 700 call, and then I sold the 250, 200 put, and then I did another one where I sold the 800 call, and I sold the 150, 100 put credit spreads. Those are up fantastic. We're up on the one 70% now in 3 days. The other one's up 10% in 3 days. It's a little shorter term one. So both of those super trade opportunities. I really like that trade. Does it still set up? Well, you got IVR uh, at 28 on MicroStrategy. In fact, let me share how I would set this trade up for you. We can take a look, and then we'll talk about IBIT, and then we'll keep moving. All right, so MicroStrategy here, up in the after hours markets, we'll see. But I was short-terming this thing, but let's even look at like a 15-day trade. And let's go way the heck up here. Do you want to still do 800? We can still sell the 800. I think that's a little exorbitant. Let's just do the 700 and just call it a day. All right, so we're going to sell the 700 call, and then we're going to go down here and let's again do something along the lines of 150, 100. I don't know if this makes sense for us, but this trade um, here, I mean, it's maybe not the right setup exactly, but you're going to take in on this trade $123 using 1,400 in margin. So this is not quite a 10%. Maybe it's a 9% return in 15 days. 9% return in 15 days. I feel pretty good with these strikes. I think we just keep playing these trades and taking advantage of MicroStrategy as we go. Is it a long-term investment? No, it is a short-term trading vehicle, and I'm going to keep making money on MicroStrategy as long as I possibly can here on it. And then let's take a quick look also at IBIT, and then we'll move on and wrap up the session for you guys. I don't want to get too long. But Bitcoin ETF, IBIT, where are we in this particular trade? Let me get out here. Let me take a look and just Okay, so I'm in this with two trades again, just like MicroStrategy has three. This one has two. I bought the long calls as a leap. So well, not really as even, well, 148 days. So 148 days at the time, 100 and actually 58 days at the time. When I bought those are pretty much just flat right now, and then covered calls. I've already closed covered calls on this once, and I opened up more of them today, and I'm already up 124 bucks or 30% on today's covered calls. So while this thing is just sitting where I want it to be, I'm writing essentially at the money covered calls on this thing. If we rise higher, then my leaps will gain in value, and I'm going to keep my extrinsic. If we drop, I'm going to keep the full intrinsic, extrinsic premium that I got. So I'm going to keep making money on this thing. And we did also put a bull trap trade on. What is the bull trap trade? The bull trap trade is where I'm selling. It's essentially a 1-1-2, but what it is the 1-1 are the call side, and the 2 is on the put side. I sold the 51 puts, which is down here around the bottom of the Bollinger Band. So this is where we're naked on the puts, which I think I would be willing to potentially even take assignment or at least roll out a little bit and down if we can do that. And then I sold this, bought the 64.68, which looks like that's not going to happen now. But this trade is in decent shape. As long as we stay above 51, we'll make some money on this trade. So I like where we are on IBIT. We're going to keep playing MicroStrategy with just premium collection strategies. Okay, I'm theta trader. I want to collect a premium. There's where we are. So a couple trade ideas, a couple things to look for. I don't really mind the markets here. Let's see what happens tomorrow. I expect just a little bit more sideways consolidation. I don't expect a major sell-off here. Yes, things are overvalued. Yes, there was an opportunity to take some profits, which turned into a little panic yesterday. But now, is there still more profit to be taken? Yeah, but do you really want to take profits on something after it's dropped now? Potentially, if it's not a trade, if you're holding these long-term uh, trades, I mean, Apple's up today, Amazon was up today, Google's up today, Nvidia was up today, Palantir hanging in there really well. All right, if you like this video, click the like button down below. Give me the thumbs up on that. Hopefully you got some takeaways from this. If you're not a YouTube member or subscriber here, subscribe away, and I'll keep sharing what I'm seeing with you guys. Take care. Bye-bye.